How's it going out there? It's March 26th. Hello, I'm Frank Curzio. It's the Wall Street Unplugged podcast. We're breaking down headlines and tell you what's really moving these markets. Daniel Creech. What's going on, man? How's everything?
Frank, everything is good, sir. How are you? Frank, I'm glad you're here. I got to talk to you about something. You're a dog lover.
Yes, big time.
Did you hear that a dog sold for a record amount?
How much?
Have you heard anything about this?
No, I didn't hear about how much.
About $5 million US dollars.
What kind of dog was it?
Well, I knew you were going to ask that. It's a breed between a wolf dog and a Caucasian something, and I can't even pronounce the name of this thing. But I thought of you because you are Dr. Doolittle himself. Frank has millions of birds, snakes, reptiles, animals, all that kind of stuff. Yeah. Frank, last fun fact about this dog. The owner, whoever this guy is, I'm not going to butcher his name, he's overseas, has 150 different breeds of dogs. Obviously, you collect them and stuff. He's a breeder himself. This thing eats 6.5 pounds of chicken a day.
Holy cow.
And I don't know how big this thing's
Where'd you get this story from? That's a great story.
This is what I do, Frank. I check headlines
I love
for
it.
you guys to try
it.
to bring economics, politics, fun, all kinds of crazy stuff.
Yeah, it's such a big game. Dogs, cats.
I wanted to bring this up a week or so ago. But anyway, I just thought that was hilarious. So there's a record, all that good stuff. So anyway, on to something important.
It's funny with dogs though. It sells so much, right? It's just, even when they have the commercials and they show the dogs, you ever see those commercials when they have like, one eye or 3 legs and they're walking around, so you could donate, help these. I mean, I don't know how many three-legged dogs do you think there are? I think every one of them is on that commercial. I might see one like every 5 years, but if you watch that, it looks like every 4th dog has 3 legs and 1 eye if you watch those commercials, because they're like, and you're going to save these dogs or, and I love when they try to pitch them like, oh, this animal is okay. He's out for sale. He's great. He's so nice. And the dog's like freaking run around, or the cat's... Yeah. Oh my God!
Been returned twice because he ate a child.
Yeah, but he's okay now. Yeah. He's fine. He's fine. Listen, there's bad people too, but there's bad dogs, right? It's just so funny. Yeah. There's a reason for someone to really take back a dog. There's got to be a reason for it. It's not because he was a really nice dog, trust me. But and I'm an animal lover, so anyway. But I wanted to start off, Dan, with some news, because first I want to be I'm really happy because I've been going away a lot. I went away for the last few days on business, and it's nice to come ba's when the market's up. Yeah. When the market's down, I'm like, hey, Daniel, handle the alerts and everything, and yeah, I'll be back a couple days. Daniel's always like, what the fuck? But we came back to Disney, right, with Snow White. And it's a pretty big deal. Like, we talk about Disney a lot here, and I'm not getting it. Like, I'm really not understanding Disney. And Snow White, it just tanked the box office. They're going to lose hundreds of millions of dollars on this. I think it generated something like $43 million. It cost, they say, $250 million, but it's more like $400 to $500 million, because you got to double that for marketing and stuff like that, which they're going to cut off the marketing because they know it's doing shit. But to give you some history on Snow White, like, companies always remake stuff. They always do. And with Disney and some of these other companies, especially when it comes to like the CGI or the animation or whatever, which this isn't animation, but it's even when you look at the Marvel movies, it's almost a guarantee that these things make money, as long as you don't do anything stupid. So if you look back at history, the original Snow White was first made in 1937. You had Walt Disney. This was his movie. This is what started Walt Disney. He leveraged everything and said, okay, I'm mortgaging my house, everything. This is going to be great. He went all in. Like most billionaires and companies that started, I'm going all in. People say you should diversify. If you want to become a billionaire, don't diversify. Go all in. I'm not telling you to do that. Everyone to do that. It's not the advice I'm giving you, but I'm just saying, I wouldn't tell you if you're like, should I do this? Should I diversify? Whatever. I'm just saying most billionaires go all in. That's how companies go billionaires. Walt Disney said, I'm going all in on this. And it was a blockbuster hit. In today's dollars, inflation adjusted, that generated close to $4 billion back then. That's how big that movie was for Walt Disney. It's why the company exists today. So when it comes to Snow White remaking this movie, it should have been a layup. Just like every Spider-Man that comes out. There was 3 Spider-Mans with the same exact story with 3 different actors, and it's automatic, $1 billion each of them. Now they even spun out more and more Spider-Man. It's like automatic. But the star of this movie is Rachel Zegler. And you're allowed to have your own opinions or whatever, but she's woke times 10 and trashed the original. None of that. She trashed the original version. That's what happens when you have like young kids that don't understand like the history behind something, right? They think like whatever they say is more important than everything. That's fine. I get it. When you're in your 20s, when you're younger, whatever, you think you're the greatest or what. I get it. But You called the original version weird that the prince was literally stalking Snow White. She made comments on social media about freeing Palestine, which, again, you can have your own opinion, whatever you want, but it did not go over well because Gal Gadot, who's awesome, she's the Wonder Woman, right? She's in this movie's co-star. She's Jewish. And it resulted in her getting a lot of death threats where Disney actually had to ramp up security because of some of the shit she was saying. And I thought when Iger came on board, he was done with this shit. I thought he was done with this. Because when you look at the history of this company since 2020, I mean, Strange World lost almost $200 million about educating children about sexual preferences. Lightyear was the latest Toy Story, having a lesbian kiss scene in it. The Little Mermaid, slapping racism warnings on Dumbo about the black crows in it. Lady and the Tramp, they took offense to Siamese cats. The Acolyte, which is the latest Star Wars series, got canceled. The actresses, they were insanely woke, right? So I don't think I've ever seen a brand blow up like this and have total disregard for what its customers want. Because this is one of the greatest brands in the world. This is this is like McDonald's when you were a kid. I don't know if you remember this, Daniel, but it was the biggest honor in the world to have your birthday party at McDonald's. It was the biggest thing when I was little.
Because the playpen?
It's just everything in there. The playpen. Okay. I like the way you call it. But it's all germs and everything. Now everyone's like, it's germs. You're good. It was the biggest deal in the world. And when I was a kid, when you see McDonald's, you lit up. You're like, oh my God, that's how Disney was. We went to Disney. You were like, oh my God. And it's not what their customers want. And you see companies like Budweiser who completely messed up, took a beating, and they said, okay, we figured it out. We apologize. We need to get better. Now all's good. People are drinking Bud Light again, right? America always forgives. They do. They always forgive as long as you just go up there and say, listen, all right, I messed up. It's my fault, but here's how we're going to get better. Okay, that's a great story because we all have flaws. Disney's not apologizing. They keep doubling down. I'm not sure how much longer they could do this, since your core customer is that family, that working family. And these working families with their kids, they hate your message loud and clear. They hate it. They hate it since 2020. They hate it even more now. And you're refusing to change. I'm just not sure. I don't know how anyone could own that stock right now. No, it's just the streaming part, which is bad enough from a business perspective. You get into a business where you have trillion-dollar companies who don't even really care about their streaming are spending more on content and building it. You can't really compete with them, but yet that is your growth model. That's one thing, right? Now they're starting to open up lots of parks, and I like that. But if your core customer doesn't want to come to these parks and they're going to Universal instead, and they're just like, I'm done with Disney, which a lot of people are, you got to get them back. Get them back, because you're the greatest storytelling company in the world. I don't understand why you just don't get it. It's there for you to see. It's their money. You see the advertising. You see just enough of this. Like, make it law. Say, listen, if anyone talks about this woke shit, you're done with throwing you off the set. Put in their contract. You don't get paid at all. Whatever you need to do. I mean, you need to button up these people because you have contracts with them. And when they're just going out there, and even if they're kids, people just don't want to hear this shit. They want to be entertained, and they don't want politics to be involved sometimes. Fortunately, we have to talk about politics because it matters with your stock investments and things like that. And we'll have an opinion here or there, but it has to do with the investments. But when you see it being injected into this company, I just don't get it. I mean, you get it. I don't get it. Like, they're clear as day. Stop doing this shit, or we're not going to go to your movies. And they just keep doing it. I don't know. Maybe it's me. I just don't get it. I just don't get it.
Let me ask you, Frank, what would Disney need to do for you to think that they think they're on the right path? So as a fiduciary role, I get it. They should look out for their shareholders. They should do things. However, I don't know, and I'm not trying to put argument on you, but if you keep doing this, like, at when would you say, okay, this is who they are and this is who they want to be and remake? Forget old Disney. This is what they see going forward. And yeah, at some point, if it hits the bottom line hard enough, maybe they'll make some changes. But like, I guess I don't know why anybody would be surprised about this.
You asked me what I would do if I was CEO of that company. I'm not even kidding.
Well, I'm not asking you that. I'm saying,
not even being arrogant.
What would it take for you to say, okay, this is who they are, and I was wrong because I thought that they were kind of the old Disney, and this is clearly who they want their customer base to be?
I mean, look.
And I'm not saying right or wrong with that. I'm just saying, like, I keep looking at this and kind of think, man, everybody seems to be shocked, but core management continues to make these movies for a reason.
Forget about shock. But it's the numbers. You own the stock. We're talking about the stock pick here. Why we own the stock. It's not even like you're shocked. Like, okay, it's not so much shock that you're still doing woke, but it is shocking that You look at the money, like $250, $500 million. Anyway, it costs minimum $250. It's probably about $400 million if I had to average. Just it's usually double the budget. They're not going to go to $500 million because it's not selling. They're going to pull their marketing budget pretty soon. So say $350, $400 million, and it's generating something that's supposed to generate $100 million, and it generated 43, and now it's not even that good of a movie, but it's just the backlash they're receiving. If I became CEO of that company, I could tell you that the market cap would increase by 3x in 2 years. And you're laughing, but I'm serious. It's very.
I'm not laughing at you. I'm laughing at the situation.
And I'm going to tell you why. And this is what I would do. Okay. And you guys feel free to email me, make fun of me, whatever. This is what I would do if I was Disney. One, I do what Trump's doing right now. Get rid of everything. Everything woke, everything, and make it public. This way, you're going to get back your original customers, which is your massive freaking base. Get rid of everything. Say, we're never going to do this again because we know our customers don't want this and this is terrible, and get rid of it. Okay, that's perfectly fine. You get rid of all that stuff. Instead of focusing on streaming and have to produce your new content, because that's what streaming is about. It's about new content. It's not about your library. Nobody wants to watch Double 80,000 times. It's about your new content. And you don't have any new content coming out. Very little. And you cannot compete with them. But you have a great library. So license that stuff. Sign deals with other people, but don't worry about creating your own content. Like go on Amazon Prime, sign deals with Prime, sign deals with Max, sign deals and say, okay, you have Disney content. This way you're getting licensing fees and you're making a fortune, constant cash flow. Instead of trying to compete directly with companies that spend $10 billion and don't even know that they spend $10 billion on content, $20 billion, $30 billion, like the Amazons, like Google and YouTube TV. They just raised their prices by $10 a month and no one blinked an eye. That's who you're competing against. Your Hulu with live TV, it's, the bundle services. You get the ESPN brand. It's just the ESPN. Get out of the woke part. I know you think that that's part of that ESPN brand, but you could tell that you're canceling so much shit and you're not even renewing some of your licensing fees. Things are really bad. You're getting rid of all your freaking good talent. Things are bad. Those are signs that things are really bad. But now you focus on parks. Open up 1 million parks. People love parks. You have unlimited pricing power with that shit. People are paying $150 just to walk in, and it blackout dates. If it's, during season, you're charging even more. You go in there, people are buying $7 freaking waters. Open up all these parks, constantly more and more rides, and keep that storytelling. Like the storytelling in the movies. You're the greatest storytellers ever. So focus on the box office, less on streaming, but these measures, and make it public that you're getting everything rid of woke because you're going to get back all your customers and they're going to know you for real. That's what you need to do. You have all the tools available. Like, I just don't get it. Like you're reducing your customer base by focusing on, this woke agenda that it's a hate agenda. There's no one that's woke that's happy. You don't see these people walking around like, hey, they're only happy if like Trump gets shot at. That's the only time they're freaking happy. I don't want to go that long into this, but I don't think it's that difficult where you have that brand, you have the storytellers, the box office, Marvel, you have so many great freaking assets in there you could do so many amazing things with, and you're just focusing on stupid shit. I just don't get it. But maybe it's me. I thought Iger said enough of the politics. That's what he said when he came in. I'm like, good for you.
Iger said whatever he needed.
And then, obviously that's not true, and he's going to be gone, and it's going to be interesting who the next CEO is. It's going to be a really big deal because that's going to happen probably in the next 12 months because he's gone. He's done. He didn't even want to come back to this company. He's done. So let's see what happens with Disney. But man, it's disappointing just to see it. Like, hey, if you do this, you're not going to generate money. And they're like, okay, we're going to do it anyway. All right, well, no one's going to buy your fucking stock then. It's going to crash. All right, don't be surprised. Don't be surprised. That freaking easy.
Looking at the stock, you'd have to go back 2.5 years ago, and it was about $10 higher. So it has been a crazy crap show.
I mean,
this is proof.
Go to 2020. People, did you go back to 2020?
No, I just went back.
Holy shit! It's like been years. I mean,
it's been terrible. Yeah, absolutely. And hey, I've been in dead stocks for a while. I understand that, but this is proof, and this is why you listen to this podcast. This is proof that Frank Curzio is a much better person than Daniel Creech and has a lot better optimistic view on other humans. Because I view Disney as them doing exactly what they intend and think they should be doing, crazy stuff. Frank, what else you want to talk about today?
Well, before we talk about it, I got to bring up a nice chart. Sorry, but this is 2015.
Nice.
In 2015, the stock was 104, and it's 100 today in 2015. Okay, yeah, your ups and downs, and then 2021, you lied to everyone and said, streaming is the greatest business in the world, and you lied. You said, we're signing all these customers. You did, but you signed them for free. Nobody cared because it's just like, oh, you're signing customers. What's your average revenue per user? It was like, $1 because you're just signing all these people internationally, which aren't really going to pay up for their services. So that's why they're going to start really bleeding tons of subscribers, especially now that the initiative came out that you have to make it clear on your website if someone wants to cancel, you just have to press a button. And I can tell you, Go try to cancel your Disney account now. You're not going to be able to do it. There's no way you're going to be able to do it. Try to cancel your Disney account now. There's no way you're going to be doing it.
What's the great movie where he says, "Now's you can't leave"?
Yeah, exactly. That's
Hey, Bronx Tale? Something like that. I knew that was up in your area. Hey, the only comeback Disney has, Frank, to what you just said about their stock being flat or a little bit higher back a decade is Dollar Tree.
Man, Dollar Tree.
You want to know how you turn $9.5 billion into $1 billion? You buy Family Dollar 10 years ago, Frank. That's how you do it.
You know, it's...
I'm being funny there.
They bought it for $9 billion in 2014. So today they sold it for...
Nine and a half. I've looked
I think
up...
it's 8.5, $9 billion.
We're
it's around $9 billion.
Including debt. Let's just use 9.
$9 billion, right? So they sold it for $1 billion to PE firms. And...
89% loss.
To tell you, listen, Dollar Tree was trying to sell this Family Dollar brand forever, you know, because it was. I mean, it's a 66-year-old brand, and they were closing stores. They closed I don't know how many stores they have, but they closed 1,000 in the last 3 years. So that's kind of when they're looking to sell it, and they just wanted a higher price, and they just like F it, you know. So, you know, why would they sell this business at such a steep discount? Considering if you look, that brand, I'm pretty sure that brand alone, don't quote me on this, I think it generates $5 billion in annual sales, and you're selling it for $1 billion. You're like, why? Because the margins are really terrible. And it was killing the company's overall performance, kind of like what AMD's going through, right? AMD, their AI is growing. They're doing well with AI. However, you know, it's now down to about 30% of their revenue comes from like PCs and phones and the businesses in gaming, and they're getting annihilated. Like those things were declining high double digits. And it's tough. And, you know, the reason why I thought AMD might have hit a bottom is because it used to be 50%, then it was down to 30. I think it's like 27% now. It is basically the shitty part of their business, just like Disney. They restructured their business and threw all this shitty international subscribers, which is, what was it called? Star, I believe that. And they were like, oh, let's separate this and put this in the garbage area, right? It's kind of like when companies spin off. They always spin off that garbage unit, and then they get a lot of money for it. And they're like, here, you can buy the garbage unit. And when it comes out in the IPO, they're like, that garbage unit, it's no longer garbage. It's great now. And they try to make you buy it. And this way they get all that money. Anyway, won't go into that. But it was hurting the overall company's margins, sales, and most importantly, it was the opportunity cost because management was spending tons of time trying to make this brand work and trying to sell it. And, you know, you're focusing on something that's not working when maybe, you know, Dollar Tree is working a little bit better. But there's a lot of debt around these businesses. And in 2015, when Dollar Tree bought Family Dollar, interest rates were basically nothing. And today we know that interest rates have skyrocketed, right? So you know, they're refinancing. If you have to refinance debt, it's insane. Now, to put this in perspective, I did a little research on this, Dan. It's pretty cool. So the Fed came out with a report in 2017 when interest rates were very, very low still. And that was when the Fed was about to start raising before we got into COVID. They lowered again, but they were starting to raise. They're going to say, okay, we're going to tighten. So now when that happens, the futures like we have today, they were pricing in rates going from, you know, 1.25% to 3% by 2019. And they said based on a $2.2 trillion in corporate loans outstanding, and that was at the time, 2017, it would result in interest payments alone increasing by $2 billion in 2017, $15 billion by 2018, and $37 billion by 2019, just in interest payments. And they were saying that's if rates go to 3%. We're 4.5%. So what does that mean? If you have to refinance your debt right now, you're effed. You're effed, which is why there's a crisis going on, which few people are talking about, and you should learn a lot about. There's few stories out there. There's a crisis going on in private equity markets right now. So when you have private equity companies, okay, like the two PE firms that just bought Family Dollar, okay, that worked out for them, that's fine. But most of the private equity companies, their job is to buy companies in the private market. Or sometimes they might see, you know, something as a huge discount and they'll buy it and they'll take it private. And they take it private because then they're going to leverage those assets 5, 10, sometimes 20 to 1. That's their job. And what do? They build out a lot more stores. They're going to lower costs. They're going to relaunch this as a publicly traded company, which is essentially their liquidity period, and they make money. They make a fortune, an absolute fortune in doing this. Even though most of the companies after they go public are really shit, right? PE firms don't care because their liquidity period is when an IPO. They don't care. Right, you see that with First Data over and over again, how much money that lost, and finally they went public with it. So then they get that money, they move on to the next deal. But PE firms right now, and these are private companies whose values have crashed to the point where they can't go public. So if they can't go public, they're sitting on their balance sheets. And now they're sitting on their balance sheets for years, and they have to refinance this debt that they took out years ago, and rates are much lower. So the PE firms are basically sitting on a ton of these assets they need to get off their balance sheet, because if they have to refinance the debt, they might go under. And this is why when it comes to the Sugarfina deal for my Curzio One members got in, it has enormous upside potential. And I didn't get it until I talked to these guys. I'm like, Sugarfina, well, I don't know. Right now, consumer brand, why isn't it AI or whatever? And they're basically rolling up all these luxury confection brands, gifting, candy brands into one giant company. And they're buying these assets from PE firms for 10 to 15 cents on the dollar, because PE firms have no choice. They have to get this stuff on the balance sheet. They're not making money on it. They want to be able to use that cash, right? And the refinancing is coming. So they're like, we really need to get this off our balance sheets. And when you look at the guys who run Sugarfina, they know this because they're in the private equity markets. And like, wow, all these guys are about to dump this shit right on us. Why don't we be the company that buys all this stuff for 10, 15 cents on a dollar? That's how so many companies made money during the credit crisis. There wasn't a lot, but a lot of private equity firms and international companies and the BlackRocks were able to buy a lot of private assets and real estate for 10, 15 cents on a dollar, because a lot of that shit, the government was happy selling some of it instead of taking over Fannie and Freddie. And look what happened to the real estate market, right? That's how the biggest investors, Warren Buffett, all of them invest. They buy stuff when shit's like hitting the fan. They buy it dirt cheap. This management team did the same thing with Marriott hotels. This is when that industry, hotel industry, everyone's used to hotel industry, amazing. You drive along a highway, you see thousands of hotels. It wasn't always like that. It was a shitty business in the 90s. And Scott Laporta, part of the management team, rolled up all these companies into Marriott and said, hey, we have the business model. Let's roll these up, buy them for cheap, and then we'll expand. And that's what they did, and the hotel industry took off. They did the same thing with Hilton. Hilton had a gaming division, which was shitty. Why? This is 2000, the dot-com recession, right? People had enough of gambling. They gambled on these freaking companies that all crashed. And it was a recession basically from 2000 to 2003. And the market sucked back then. And what do? They spun off the casino business, and then they started buying these casino businesses for nothing. Absolutely nothing. Whether it's Bally's, whether it's Caesars, and that they were able to spin them off later on. They made a fortune doing this. But that's when you want to buy these assets, when you get them at a steep discount, because you have so many companies and so many people that are desperate. They're forced to sell these brands. But PE firms right now, guys, if you can, and start doing your research on it, it's a story a few people are talking about. A lot of these guys are in trouble. They're sitting with deteriorating assets on their balance sheet, which they're not going to go public anytime soon. The valuations are down. They're generating no returns for investors, and now they have to refinance the debt, which is almost going to put these guys out of business. It's insane that they're just like, hey, give me any cash for it. Give me a couple $1 million, give me $5 million, give me $10 million or something that they bought for $100 million. Because now they can leverage the shit out of this and go all, and now they're generating their fees. Right now, people who invest in private equity firms are pissed off because they're not generating good returns, because they only generate the returns when these companies go public, and the public market's kind of shitty right now. It's really shitty. You see a couple of deals coming out here and there, but most of them are kind of shitty. So when I see with Sugarfina, and I talked to Scott Laporta and Paul Kessler, Paul was telling me, we have 13 companies we're ready to buy. I'm like, how's that possible? Now I know how it's possible because they told me about it and I've done the research on it. I'm like, wow, these guys got to buy 13 freaking companies. They have Sugarfina, they have the brand, they have the facilities. Now they're just going to merge all this stuff in this roll-up strategy. And it's a company with an $80 million valuation that they plan to build into a $1 billion valuation. At least that's the plan. They've done it before. So could it happen? No, there's risks to the deal. There's lots of stuff. Maybe we have a prolonged recession, but I love the freaking business model. That's something like, I was like, holy shit, you really want to invest like in chocolate companies or whatever, but they're consolidating this to make a massive company. That's the best time to do a roll-up strategy, when you can buy these assets dirt cheap and they're just being given to you because other companies have to sell. They're forced to sell. So that deal closes next week. We've been talking about Sugarfina. If you're interested, you have to be a one member to get access. But if you're interested, email me, frankcurzioresearch.com. We have a discount on Curzio One. But just pay attention to the private equity market, because I just feel like David Faber should be doing more work on it, because I love when he talks about deals. He always does a great job. That's what he does on TV. Just even with Family Dollar, with all these deals coming out, you could tell because he really gets into it. And he's one of the best at it. He should be really bringing this up, because private equity firms are in a lot of trouble right now. They're just selling their assets. They're looking at their balance sheets suck right now. They have no cash. They have no capital, no dry powder. And they want to have dry powder because a lot of names are getting crushed. And this is the time you want to be aggressive. They can't get aggressive because they got aggressive a couple of years ago when interest rates are zero, and now they have to refinance a lot of this shit, which is going to kill them. But it's something very interesting. Sugarfina is the best way to play it for us, but there's probably other ways, which I'm trying to figure out, because you probably could leverage that idea and make a lot of money, but no one's really talking about it, Daniel. Nobody, which is incredible.
That's right.
I don't know. But look, Bloomberg has a couple of stories on it.
Good deal for us. Well, deal, yeah.
Listen, it's good terms and it's a good deal. I mean, you're getting a 6% dividend, you're getting full warrants at an $80 million valuation, which was valued at $80 million. They just came out with their new valuation from someone independent, which values at $96 million. You're getting $80 million. Could it work out? I'm hoping. It's one of my biggest investments. It's risky, but maybe it doesn't, right? There's risk to every deal, and I tell everyone that. But for me, I love the thesis on this now that I understand it, because nobody's really doing this. And like Paul said, when I interviewed him, I give that interview to everyone who's on our list, even people who are non-one members, just to see the work that we do for Curzio One. And he said, he goes, we're the only outlet. They're dumping this stuff to us, and we're there, and they're all calling us. Our phone's ringing off the hook with deals. And that's the position that you want to be in. Even in business, that's the position you want to be. You want to have strength when everyone else is weak. And that's what they have. And that's why we're raising money, trying to really, pad their balance sheet so they can use that money to buy a lot of these companies that are dirt cheap, which is pretty cool. So I'm hoping it works out. Again, there is risk to every deal, but you can see why I'm so excited about this and why I've been pitching it so much. So, and again, hopefully it does work out. They think they're going to go public 9 to 12 months. If they do, you can sell the warrants immediately. These guys, public is already in the works for them. They said 9 months. I'm saying 12 months. These guys don't look to go public. They're not looking to get a double on this. They're looking to increase sales to 100, 200, 300 million. This way they get institutions involved and they do even bigger deals. So, for me, I like deals like that. I feel like it's a lower risk deal with still massive upside potential. Gives you a chance to take money off the table with your warrants after a year if they go public, which you could sell immediately if you want. And yet long term, it could be very, 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 very promising and be life changing. So that's the deals that we offer in Curzio One. So, but it all ties into what's going into the markets right now. It took me a while to understand it, but now I get it. I do a lot of research on it. Any of you got any research on private equity firms and stuff that you're seeing that I just talked about? Please. FrankCurzioResearch.com. I get so many emails from everyone through China, what's going on there, different countries, economists. It's great. So that's what this network is about. But really good stuff. And I wonder how that's going to play out with PE firms, especially since rates are remaining higher for much longer than anyone anticipated. And it looks like they're going to remain higher even longer throughout this year. Let's see what happens.
A lot of chaos. You want to talk, I would like to talk crypto. Do you want to talk crypto for a minute?
Crypto, GameStop, buy.
Listen to
Did Kramer give the buy?
Ruining my segue.
It's up, what's up, 11%?
It was. I don't know what it is up now. It was up a little bit more than that.
Yeah.
Yes, this is interesting because this has been a saga for a while. I tweeted a long time ago, which in our business means I was wrong. Early does not mean correct in this business, people. I was wrong.
16%.
But quickly, Frank, they reported earnings last night, reported 30 cents in earnings per share. That was 22 cents better than estimates. I think there's always only two analyst estimates. Revenue fell almost 30% a year, Frank. And if I told you, as you just said, the stock's up 15%, why? How do you increase earnings by lowering your revenue? Well, you cut the hell out of cost. Frank, in 2023, they exited operations in Ireland, Switzerland, and Australia. This is after Ryan Cohen took the helm. In 2024, they closed down operations in Germany. During 2024, Frank, they also closed 590 stores in the U.S. These guys are cutting things down to the bone, and none of that matters because the big announcement was, as you just said, the board of directors under Ryan Cohen, who we'll talk about more in a moment, has said that the board of directors has voted in favor of having Bitcoin as a U.S. Treasury asset, Frank. This company has $100 million left on its non-expiration share buyback. That's not that big of a deal, although we are a fan of buybacks. It has over $4.5 billion, Frank, in cash. And now it's telling you it's going to buy Bitcoin. My question to you is, how much Bitcoin do they start buying and when?
Do they really have $4.5 billion in cash on their balance sheet? Is that right?
Well, you're calling me out. Now I have to look it up.
I mean, they have more cash on their balance sheet than they do in sales. Which is
Frank,
amazing.
It's dying business. Did you not listen to anything I just said?
I don't want to say credit to the CEO because he really, I'm trying not to say the F word a lot, but he really effed, the Wall Street bet guys. Because as you have Roaring Kitty like bringing this stock up, and every time he did a financing right in their face, right? So which is the stock could have run incredibly and really destroyed all the shorts. Even further, like it did once upon a time when I think the stock went to $300 or something like that. I don't know. It's crazy.
It was something ridiculous.
But it's a lot of cash on the balance sheet. So what do you do with it? Well,
$4.7 billion.
$4.7 billion in cash. How's that possible?
Now, to your point, sorry to interrupt. I promise I'll let you go after this.
Okay.
But to your point, how did they do all that? Well, they raised these guys were going to the equity markets. These guys made MicroStrategy look, nothing, and they were at least buying Bitcoin. But they raised a couple $1 billion in just at the money at the market offerings, Frank. So that's they diluted the hell out of shareholders. And we're not talking about if you've been holding it. I'm talking about from here forward. That's what I was asking you. But sorry, go ahead. So you're right. They have all that because they just diluted the hell out of everybody.
Yeah, I think we have to look at the bigger point instead of looking at GameStop here. Okay, there are more companies that are going to announce this, and I'm not talking about the GameStop's where they're announcing it because they want their stock to go higher. They're going to announce this because they're going to probably make a shitload of money on their cash by doing this, compared to just keep it on the balance sheet or keep it in treasuries. And they're going to do that because there's a limited supply of Bitcoin, which all of you know. You should know by now, especially listening to this podcast for the last 6-7 years. Why we've been buying it since 6,000. The massive demand that's coming is coming from institutions. Okay, you have Goldman Sachs, Wisconsin's pension fund, Bank of Montreal, one of Abu Dhabi's sovereign wealth funds. All these guys just bought a ton of Bitcoin. I think Goldman Sachs was over $2 billion. Abu Dhabi's was billions. Right, now you have pension funds getting in, and they all bought as of last quarter, which is Q4. And why did they do that? Because Trump got elected and became president. Now, why is that a big deal? Because now they're going to be able to legally do this because it's a fiduciary responsibility. They can't get into Bitcoin because you saw what happened to the banks, right? They talked to the SEC when it came to Silverbank, when it came to Signature, and said, hey, we're going to take custody. Is it okay if we have, if we're into Bitcoin? They're like, sure. And then they went after them and basically destroyed them and said, if anyone does any business with them, we're going to audit you. And they cut off their lifelines and they forced them into bankruptcy, right? These companies were solvent. The SEC came out and they forced those companies into bankruptcy, right? Which is illegal. That's Operation Choke Point 2. And we'll see how that turns out. The lawyer who last did Operation Choke Point 1 actually won against the government. And this was, during the Obama years when he shut off porno industry and, just all kinds of companies, like anything that they thought was risky. They said you can't do business anymore, which is kind of legal. So the banks can't do business with them anymore. Now that regulation is coming, that's their fiduciary responsibility to make sure that they're getting into an asset that the government can't just turn it off. And now you're going to see this regulatory framework because, as you mentioned, you have Paul Atkins, the confirmation, what day is that, tomorrow?
The debate, whatever that's called, starts tomorrow, the 27th. Yeah. So nominated chair SEC Paul Atkins gets grilled tomorrow, Frank, I guess. It's all
grandstanding, but anyway, he's going to get nominated. And
he already served, so I mean, you would think that it would be a shoe-in.
So he's going to get, so he's, once this happens, he already has the framework made up already, right? So once they're going to push this right away. And once you have the framework, they're going to say, I guess everything on Coinbase is not a security. They're going to probably give you FDIC laws where it's going to be insured. They're going to make sure your assets are protected. They're going to treat it like it's a brokerage firm. They're going to allow custody in the U.S. These are all things you really need to see to grow this industry because someone that's been in this industry from our token, when you had custody, these companies, T0 couldn't take custody. We're using third parties overseas. It's really difficult. There's so much shit going on, and you had to be careful where we have to file financials, I think, every 6 months on a T0 website because we're kind of like semi-publicly traded with our Curzio token, right? And that's a direct equity stake in our company. It's not a utility token. It's a direct equity stake, right? If we get bought and you're a shareholder, just like in Microsoft or whatever, you're going to get paid. And it was amazing doing the financials because T0 had to change their language almost every single time that we did it. So we're reporting financials and we'll talk about risks and everything just like you would do in the annual report and quarterly reports. But it was amazing how they always came back with edits for themselves and saying, oh, you can't say this, can't say tokenization, you can't say this, can't say that. And because they were fighting back and forth going, they're not too sure, they just don't want to get sued, right? They're trying to follow laws, but there's no laws there. And now you have the SEC as early January saying we're going after everyone. To the bigger point here when it comes to GameStop, you're going to see a lot more companies do this because there's regulation coming. You're going to see more institutions. It's just the tip of the iceberg. So if you're looking at institutions as a whole, they manage close to $100 trillion in assets, which BlackRock suggests a 2% allocation is going to eventually go into Bitcoin over time. They're saying maybe 3 to 5 years. To put this in perspective, let's say BlackRock is right. And it's fair. They're definitely talking their book because they have the largest Bitcoin ETF, right? So BlackRock does, and I get it. But if they're right, 2% of the $100 trillion in money managed by these institutions, if that flows into Bitcoin, that's $2 trillion. Into an asset right now, Bitcoin, that has a market cap of $1.7 trillion. What do you think is going to happen? Keep in mind, this does not include countries creating their own strategic Bitcoin reserve now that the U.S. has done that. And this is the Czech Republic, this is Russia, Switzerland, Poland, Hong Kong, Venezuela, Germany, Japan, South Africa. All of them mentioned publicly they're looking into doing this and creating one. Also, it does not include the U.S. buying more Bitcoin or buying Bitcoin to add to a strategic reserve, which is still very much on the table. You just need Congress approval, right? You have Cynthia Lumens, right, who's responsible for this. She's still pushing it, which it could result. They wanted to buy 200,000 Bitcoin every year, which is more than produced per year right now. I think it's 164,000 Bitcoin are produced every year after the latest halving, which was, 2024. And if you times that by the full year, it's around 164,000. And she was talking about buying, the U.S. government alone is going to buy 200,000. Even if they buy 25,000 or 10,000, it's a game changer. Also, this doesn't include like the companies like MicroStrategy and others adding it to their balance sheet. It does not include any retail buying at all. Any retail buying. So if you look at Bitcoin with its limited supply, where do you think it's going to go? It can go down to 60, it can go down to 50 again, and go down to 70. But I can tell you, just like I told you when it was going to 100,000. Okay, I'm not saying I have to pat myself in the back. Went through the ups and downs, got a couple emails or whatever. I said, I don't know. I'm not going to give you a time frame, but it's going to be within 3 years. It happened about 2 years. Then it went to 100,000. Now pull back. Now you've seen it come back. You're going to see more money flow into Bitcoin. As you do, you're going to see other cryptocurrencies, especially when these new regulations come out. The next 100 are really good companies that you're going to see money flow into. Now, we predicted this a while ago and we lost money, right, for our subscribers, and it's come down. I told them, just stay there. I've seen some of these things down 30, 40%, and you're up 1,000% and 2,000%. We've had those gains in our portfolios several times of these companies. But when you look at the money that's going to pour into Bitcoin with the limited supply, all this is coming. Okay, you could trade it short term and be like, it's 80,000, 70,000. Oh, shit. Now the strategic reserve is announced. I thought it was disappointing news because everyone thought they were going to start buying it. Instead, they put what they had basically in custody, if you want to say. That's what they're using. They're putting all in the strategic Bitcoin reserve and keeping it there. And that's what they're going to do if they seize more Bitcoin going forward, which is taking more and more supply off the market that can't be sold. So now if these other countries join in, now that you have different accounting laws, FASB laws now no longer says that Bitcoin or any other crypto has to be a liability on your balance sheet, which is a joke. Now it's an asset. Now you could borrow against it. Now custody's coming out. Now it's going to be just like a brokerage firm. Now more people have access to it. The demand for a limited asset, it's here. You can't argue it anymore. You can't say it's going to zero. You can't say people don't like it. It's here. It's already integrated in almost everything within the banking systems. It's here and it's going to go a lot higher. Pay attention. Start picking away at it and make it a 1%, 2% allocation. Just like I just said with gold, just like I say with Bitcoin, gold was shit for 10 years. I have gold. It's like 2, 3% of my portfolio, and a lot of my gold stocks are coming back. A lot of the gold that I own, too, gold coins. I mean, I bought them when gold was 1,700, and again, it was going up and down or whatever. But now it's just long-term you're holding these things. Some of this stuff you're going to leave to your kids. There's an opportunity to buy Bitcoin under 90,000, man. It's really attractive. Again, maybe it goes to 80, maybe it goes to 75, whatever. But long-term, you've seen this massive demand. These tailwinds are not going away. Nothing's going to change. At least for the next 4 years that Trump's in office, the way the Democrats are still promoting some of this woke shit and still won't get away from it, it could be another 8 years or 12 years before they get someone in office because they're not changing their policy, which the whole world, all of America voted that we don't like those policies. That's not what we want. And they're not changing. So as long as you have the Republicans, no matter who it is, they're going to be pro-crypto. And I think you're going to have the Democrats pro-crypto unless they hate money. And that's all politicians care about is money, because more money flowed in from crypto than any other organization when it came to campaign financing, when it came to the money coming in and donations. And that could be a part of why Trump won. Getting the younger vote, getting a ton of money and said, hey, you know what? Let's be pro-crypto. Is it bullshit or whatever? He didn't like crypto? Maybe. He's played it smart politically, and now all these guys are on his side. And you're going to see this industry develop. Again, keep politics aside. Bitcoin's going to go a lot higher, and you're going to see a lot of other crypto companies go higher as more money flows in because they're going to look for other outlets and what are the names to own. More ETFs are going to come out, which are structured, which are managed, that are going to own more than Bitcoin, Ethereum, and Solana. That's where you can make an absolute fortune in this industry, and I think it's going to happen over the next pretty much 12 to 24 months, which, by the way, Daniel, is kind of like 25 years in today's terms. Yeah. Because everybody wants to be a billionaire tomorrow. If someone says, oh, well, we're going to wait next quarter, we're going to see all the benefits, the stock goes down 30%, and then next quarter when it happens, it goes up 30%, but everything's so short term. But if you could just ignore the noise, listen, it's going to be really good for you when it comes to Bitcoin and crypto. I think it's going to do very, very well now that you have regulations around it. So.
Yeah, look no further than right here. I want to be a Bitcoin billionaire by tomorrow too, so I understand that very, very well. A couple of things for me. We can get more into this tomorrow, Frank, on Wall Street Unplugged Premium, but there is some momentum. You mentioned more companies will add Bitcoin and such. There's a cool website, bitcointreasuries.net. I don't know if you've ever messed around with that, Frank, but they show you just categories from public and private and all that kind of stuff. BitcoinTreasuries.net. This has 88 publicly traded companies holding Bitcoin, 22 private companies, 12 governments, etc. Gives you some fun stats, but that'll be something to look and watch as things unfold. Not to, obviously MicroStrategy holds over 500,000 Bitcoin now as it continues to accumulate. We'll see GameStop on this list very soon once they make their announcement. Frank, a couple other things really quickly here.
Bitcoin and treasuries. Isn't that funny though?
What?
Like the Bitcoin, it says Bitcoin and treasuries. I got that site up.
Oh, yeah, how they do.
Just 3 million, but like the stable coins or they got to be backed to so they buy treasuries, which kind of like you were saying it, right? Isn't it kind of funny that?
Yes. We can't wait to get into the irony of how Bitcoin is going to save the most fiat fucked up currency in the world. But that's the way we roll here.
Yeah, the dollar's going to crash, but we have stable coins that are all in treasuries because it needs to be backed by the most strongest asset in the world.
Hey, just a couple on what you were saying about momentum and how Bitcoin is being accepted, and not just Bitcoin, but crypto. Did you see the news out of Interactive Brokers?
No.
Interactive Brokers, a phenomenal trading platform. I don't use it personally, but I know too many people that do, and I need to switch over there. But Interactive Brokers expanded their listing of crypto offerings, Frank. They are now going to add Solana, ADA, XRP, and even Doge trading.
Wow.
This is already in addition to Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. So some momentum there. DJT, the company that bears the initials of our president, signed a deal with Crypto.com, Frank. They're going to do more ETFs and such for Bitcoin-related assets. So we have a lot of momentum there that we can dig into a little bit more tomorrow if we choose. But there is a lot going on around this regulation, and the Genius Act that got voted through the House. I always get these confused, Frank. It's now going to the Senate. There's two pieces of legislation out there, but that's popular and a lot of momentum because the House has passed it. If the Senate takes it up, Tim Scott there is thinking he's going to get that within the first 100 days of Trump's presidency, which is about a month away. It'd be April.
Yeah, but then again, on day one, we're going to release the JFK files. Day one, on day one, the war is going to end. On day one,
Frank, were you included on any group chats for any war plans or anything? I wasn't. So
listen, on day one, when people invest in our company, they're going to be a billionaire on day one. It's just so funny. I love it.
But a lot of good news there. So I like it.
No, it's cool. And I'm going to tell you, listen, if you're going to start a business too, if you have a business and you're thinking of a marketing model and stuff, and I've been through the ups and downs with our business, but you talk about Interactive Brokers, the brokerage firms, we have Robinhood. Robinhood disrupted the whole industry. Said, hey, we're offering free trading. Free trading, and everyone else wasn't offering free trading, right? That's how they made their money. That was their bread and butter. And yet you can say, okay, it's not really free trading because they're taking a tiny percentage, and nobody really cares. Like nobody really cares about that, even though, you should a little bit, right? Because you have Citadel behind the scenes taking a percentage, and that's how they're making their money, and that's fine. And then they have all kinds of like pro versions on Robinhood and stuff like that. But they forced every single brokerage firm to change their business model. And when I look at Interactive Brokers, they did such a great job. I even have an account at Interactive Brokers. Again, we're not marketing them. I would love to market them. I would love for them to sponsor this podcast because, I love them so much. And again, I'm not getting paid by them, but my mother has an account there too because they said, out of all this stuff going on, and remember it was like 30 free trades or all this stuff, and then it's like free trading and all this. What they did is they came up with a marketing plan that no one really expected. And they said, hey, you know what? All that money in your money market account that brokerage firms love because they pay you nothing, just like banks, and then they lend it out and they make a fortune off of you. We're going to pay you 4% of the money that you're not using in your money market account. And now it's about 3.75% with interest rates. And I was like, holy shit, because sometimes you want to be in cash, and now you're being cash. You're getting paid a lot of, that's a great return, especially with inflation lower than 3%. You used to have a negative real return, which accounts for inflation, right? So inflation's 4%, interest rates 2%, you're actually losing money in cash. But that's not the case anymore because you're making money. But real interest rate's positive. And now they got so much business and just blew up, right? They're so big. And now they're coming out with other things. And then what did Robinhood do? Did you see what they did? Their announcement with their marketing right now? I think it's 401k, I think, or IRA. They're matching 3% if you have your IRA, I think.
Nice. No,
so they match, I think it's 401k.
Gotta
match
compete
3%.
For funds. Money goes
we're gonna, and so, when you have your business, if you're going to do something that everyone else does, it's very hard because if you're doing that even as a small business, they have deeper pockets and it's hard to compete. You have to do something that they can't compete. And there's a lot of times they can't compete with you, a lot of things. Like for our business, that's what I needed to figure out. How do we figure out? Well, we got a brand. A lot of competitors don't really have a brand. You don't even know who's running the brand. You know anyone that's there. We have credibility. We have the ability to actually go into consulting, right? We have the ability to go into advertising because we have the podcast, which we're going to see more advertising on our podcast. Like every podcast in the world does except for us. We're going to change that. That's easy money coming in, and we want to make sure we're promoting the right brands, not just whoever wants to give us a check, right? Because I'm not going to promote shitty brands. But, you want to see where you compete. It's amazing how, Robinhood, right? It was E-Trader's Fidelity. It was Schwab. It was all these freaking guys. And now you look at Interactive Brokers and Robinhood and even Coinbase, right? It's amazing how you penetrate the industry. You come up with different things. I don't know. Interactive Brokers, they're just so forward looking. It's such a great company. It really is. It's good. It's the reason why people made so much money in that freaking stock. So
I don't know his name, but the chairman is always I
love the chairman because he's so funny because every time he goes on CNBC, he does it with this camera that's like 15 years old. And his camera is all the way up here, and he's looking at it, like you see like the top of his head, and he's talking. He's got this heavy accent. And he's like, but it's so funny because I'm like, I love him, and you're like, you just want to say, hey, I think they called out, who was it? I think Joe Kernan called out Novogratz. Because Novogratz had this camera that used to come on. And he's like, you know how much money you make, at Goldman and everything? He's like, you really can't get someone to get you like a better camera. But it was so funny because every time he talks, it's like you see his top of his head and he has a heavy accent, but he's very smart and he's hard to write people. And man, that marketing strategy, the assets, I'd love to see it if you want to send it to me. It's pretty easy for me to find as well, Drew Capital IQ at Bloomberg. But to see the assets that have flowed into that company, holy shit, over the past like 7-8 years, is unbelievable. I mean, it's amazing how they outperformed everybody. It's just really cool. So I think another topic I want to go into really quick is, AI. So I saw something and listen, I love seeing this because it's something that people don't talk about because Google was supposed to be, their business was supposed to be really, they would threaten the most from AI because you can go different sites and search through AI and you get better results and they're not biased, right? So that's where most of their revenue, 90% plus of their revenue comes from, which filters into cloud and things like that. But Google's new Gemini 2.5 model, which is built with reasoning, I'll explain that in a minute, it ranks number 1 on the LM Arena leaderboard. The LM Arena leaderboard is basically independent. It's what people use, and it's constantly updated like almost by the minute, and it shows which systems are the best, and they have like these probabilities and stuff like that. And if you're watching us on YouTube, I could show you a picture. And it used to be based on science and mathematics. And they say what systems work the best based on the science questions and mathematics and how quick it is, how accurate it is. And, they have these percentages. Now it's reasoning and knowledge because we're taking the next step in AI. And when you look at it right here, it says reasoning and knowledge. They're like 18.8% reasoning and knowledge, which is Gemini 2.5, which is their new large language model. And they're kicking everyone's ass really in this. Now in science and mathematics, it's a little funny because in science, they're almost the highest. They're 84%, but 2 other companies are a little bit higher, I believe. This is Claude and number 1 is Grok. Even in mathematics, number 1 is Grok. And when I think about that is Grok was started so late in the game. And this is Elon Musk and X, and I know he has a lot of people behind this, right? But and he built the system in a few months to where Jensen Huang was like, holy shit, like I couldn't believe like how quick someone could build a system like this that's actually ranked number 1 in science and math. But when you include reasoning and knowledge, this is how you're using AI as the next step, which is building web applications, agentic code. So you're training AI agents to act independently like humans. This is where you're looking at Google and the Gemini 2.5 model excels. And this changes a lot. Like this, this basically, I'm mentioning this because it feels like every week, but it's probably every month, new models are being released or updated. And you're looking at new models from OpenAI, Claude, Gemini, all these systems. And basically, they get better and better. But this competition is pushing the best systems and the best companies with deepest pockets to constantly innovate. Are they going to get left behind? Which is great news because it's the reason why we're running at light speed with AI. And people think it's slowing down. It's not. It's why Jensen Huang said that we need 100 times the computing power, not because of generative AI, which is what you're seeing, which a lot of people use, where you plug it in and you can. I mean, I use it for my daughters all the time. I'm not telling it to write for them. I use it as a research tool. Like create a multiple choice test on World War I, include these 15 terms. It's an 11th grade test and put in as many prompts as you want and give me answers on a separate sheet. And it gives it in 1 second, right? Seriously, in like 2-3 seconds, you have a 40 question multiple choice test that I can give them and it's helped them out tremendously. You could do that. That's large language models. The next step of this is going to be task specific AI. Which is, it has to do with reasoning. It has to do with human-like intelligence. It has to do with reactive machines, agentic memory, predictability. These are the things that are coming to AI where we haven't even scratched the surface, where these things are going to operate as close to a human as possible. They're going to be able to predict. And remember, humans make mistakes. So to think this is going to take over all of your jobs or that this is going to be a perfect system, we're not perfect. And that's what it's based off of. Our information. I mean, you could read a textbook right now, Daniel, and based on what the AI system is getting from where it's getting it from, Christopher Columbus discovered America and Christopher Columbus didn't discover America, depending on where it's pulling its information, right? When I grew up, it was Christopher Columbus. Now, all of a sudden, it's not Christopher Columbus. I don't know. I don't know what changes history. History is usually history, right? It's usually factual based and people write about it.
The winners change history, Frank.
But yes, but the point is even in situations where we think things are perfect, even say if it comes to a stock trading system where AI systems are being used, when something works, everyone piles in until it doesn't work, until a mistake is made. And that's a dangerous part of AI, but that's where they're trying to get the predictability. We don't have predictability, right? We have probability. We could say, hey, based on this, what we've seen in the past, this usually happens. And now you have AI figuring that out to try to increase those percentages. But it's all about probability and forecasting. You're not going to be able to forecast at 100%. That's what they're trying to get to. But the closer you get to 100%, the more every advertiser is going to sign on to you because now you get closer to your customer. And the next generation of this is going to be incredible, and the companies are going to make money off this. So for those of you that think AI is slowing down, when you really look at this list and you see this constant changing, seriously, every month another company jumps to the top here. And all these developers are using these systems. It's really, really incredible. Please start learning about AI. We have a member of our team who is managing editor, and I told her, I don't care what you spend on AI. Sign up to so many different services, whatever. Monthly, they're $20 to $75 a month, whatever you don't like, cancel in a couple months. And now she's using AI to basically increase her productivity, I would say, by 3x, at least right now. And so much so that one of my biggest investors said, hey, you know what? Do you mind if I talk to her really quick? I said, not at all. I said, you talk to her? And he was like, that was amazing. Right. So instead of like being an editor and being like, wow, this stuff could edit and being afraid of AI, she's learned to use AI to increase productivity, which is making her worth that much more valuable. That's what you need to do. Like embrace it and start learning about it, how to increase productivity. If you're at a job, use AI to make you more productive. And you're going to be a valuable employee. Instead of just sitting there and saying, oh, AI is going to take my job because I do the same freaking thing every day. Find out how you can increase productivity. And again, it's a learning curve. People normally don't like to learn new things. Learn it because it's not just protecting your job. You're going to increase your salary by a factor of whatever, because you're going to be that much more valuable to the point where maybe you can even start your own company one day where people are going to be able to use those services. And you could do that. The knowledge is out there. You got everything out there. You can research a lot of this stuff, and it's not expensive. You could have like $1,000, $2,000 and really sign up to like probably 10 different services and learn all this stuff. Seriously. Once you do that, you're going to learn a lot, what works, what doesn't work, how you post on social media. It's working for us incredibly, social media platforms. We're growing on all of them because we're learning about the algorithms. We're learning how to use AI. We're learning how to produce the content that we're saying right now, where it's only on a podcast format, but we're now changing it where we used to copy and paste this to YouTube. That doesn't work. YouTube is a different format. You got to shorten everything. You got to go right into the titles. You don't have an introduction. This is what we're learning from our partners and people that were, services that we're hiring and consultants. Now we're starting to increase our traffic tremendously over our social media platforms. Learn this stuff. It really, really matters. And just to see again, Gemini, this is 2.5, which is Google, which you thought was severely threatened. Now they're one of the leaders in AI. And that's how it's going to continue because these guys are continuing spending money on this. They need to be leaders in this industry. And the fact that they keep competing with each other, it means more and more money is going to continue to be spent on this industry. There's going to be lots of opportunities to buy for you. And a lot of those opportunities will come in our AI newsletter or on our Wall Street Unplugged premium podcast, which we tape tomorrow. But I wanted to bring that up. I was just surprised that Gemini is really at the top and really kicking ass right now. And Grok, which is like the newest one, right, is at the top in science and math, which is also incredible.
Yeah. All it takes is money. Buy those sweet NVIDIA chips and band them together. Yeah.
No, it is. It's and NVIDIA's too. NVIDIA hasn't really come back. Still can't.
We can talk more about that tomorrow too. There's more stories out there about this is a good one. I thought this was fake, but evidently it's real. Evidently, the Financial Times is writing about how China is talking about environmental restrictions on going to hurt NVIDIA's chips because they're not made. Yeah, I'm still not sure that it's true. I've seen it. CNBC was talking about it. It was interesting. But yeah, so anything to push stocks like that down are great. Because China gives a flying Florida about the environment like nobody I've ever seen.
Yeah, it's true. It's true. And really, if you look at China, I mean, China has pulled back pretty sharply, right? I mean, if you're looking at, I saw this stat. So where is it? I'm going to try to find it here for you. So I get all these research reports from everyone. I was just surprised because some things you're not covering, you don't really know, right? Because China really taking off. And I'm like, man, China's taking off because you see a lot of money flowing into it. There's this whole promotional thing. And I know, you got hedge funds getting into it.
They've moved.
And it moved. They moved a lot higher. But there's
hedge funds are making money.
To me, there's no basis behind it because you're still seeing they're like, oh, there's stimulus plan. They've been on stimulus plans forever, right? It's just like, hey, we're getting into this. It was good timing. And credit to the people who bought it. But when you're looking at China, it's really kind of breaking down right now. So, it was great. It was awesome at the beginning. And now you're seeing it pull back. And I think it's in correction territory.
Well, they're doing everything they should. I mean, President Xi just met with a ton of U.S. CEOs and leaders. That's good. He met with Chinese leaders without locking them in a cage. Remember that whole Alibaba and Jack Ma disappearing off the face of the earth for a while. Although there is a billion people over there, so it's easy to blend in. I get it. You don't stand out there. But yeah, they did that. Listen, they keep teasing about this more stimulus and stuff. And I get it. You're not wrong in saying that that's wrong, Frank, but it does work. And those guys have moved markets. Baba, all those guys, a lot of their tech trades have absolutely skyrocketed. I'm sure the hedge fund guys have, your boy Tepper, he's got to be up a ton of money now.
Yeah, it should be up a ton of money, but there's this massive like money's flowing out of China immediately. Because if you have no substance behind it, you could always drive something higher by a story.
I'm not disagreeing with that at all.
Just listen, Disney drove its stock from $100 or basically $8 to $175 on a story. We're adding all these subscribers. No one even looked at the average RMP user. When they did, they're like, how come this company isn't making money? So at the end of the day, you have to come up with saying, okay, where do we see China? Where do we see statistics? How is China's economy performing? You're not seeing it. You're still not seeing it. Even from my sources, you're not seeing it. Things are a disaster there, but if you have enough of a marketing campaign, you could push any stock higher in the short term.
Absolutely.
And any sector higher in the short term because there's not a lot of options, especially when you have one of the biggest hedge funds, one of the most influential guys who's my favorite fund manager by far. You're able to do that if you keep pushing. And I think that's the case because now you're seeing China really, really pull back now. And let's see what happens because it skyrocketed and now you're seeing it pull back. And once it pulls back with these algorithms and stuff like that, with hedge funds being involved, it usually accelerates in either direction. That momentum direction. It's either going to go higher or lower. And now it's going lower. You're probably going to see it go a lot lower. So let's keep it
simple. China is a bunch of communists. You do not invest in communism for the long term. This is a trade. It always is. It's a manipulative situation. That's the best thing you can say. Anybody telling you to buy China for any other reason is either lying or not paying attention. They're Florida communist people. It's not anything new.
Yeah. No, absolutely. Absolutely. Well said. So coming to the end here, covered a lot. Questions, comments, you could always feel free to email me, frankcurzioresearch.com, especially if you're interested. If you want to get into one membership, we discount it tremendously for 1 year. It's like a trial membership just so you can get a Sugarfina deal. And we have another deal coming out next month. It's really cool in biotech from one of our best sources in biotech that's making a lot of money for our subscribers in the private markets. So it's a really cool deal. But if you're interested in that, you have to be a credit investor. It's $25,000 minimum. We're going to close it next week. If not, no worries. I'm very upfront. I get to talk to you. You get a lot of membership perks and stuff like that, plus access to our conference, which is going to be in September, October, which would be awesome. I get to meet everyone in person. I'm going to get a lot of people to speak there, a lot of people I interviewed on podcasts and stuff. So it should be really cool and a good event. So if you're interested in that, call me. 20 people, I think 3 or 4 people let me think about it or whatever. Most people came in because the price was absolutely right for them. And it makes a lot of sense. And it gives you a chance to try it for a year. And if you don't like it, you can be like, okay, you're not spending the full membership, which is very, very expensive because you're getting all of our products and services free forever. Along with private placement deals if you're a credit investor. But it's a really good deal. And again, I'm really high on Sugarfina and I'm hoping that thing works out. If it doesn't, I'm going to lose money. The guys behind it are going to lose a lot of money. I've gotten into deals, guys, and I tell Daniel this as well. Like if you look at private deals, we got into, I think, 3 different mining deals that all went to shit because mining went to shit. And the person who gave it to me made a lot of money for me and subscribers in the past. And I remember seeing him. I saw him again recently at a mining conference. I saw him a couple of years ago, and he apologized. I said, don't apologize to me. I said, 1, you lost 10 times more money than everyone else that did. I know the risks. Everyone that's getting in knows the risks, and sometimes they don't work. That's fine. But when it comes to these private deals, you want to invest in several of them because when you hit on 1 or 2 of them, it's going to easily pay for the next 20. And if you're really lucky, you could really get into something that could be life-changing. And that's why I like Sugarfina because I think that's the possibility long-term. And also, I think you can make money like a quick double if it goes public in 9 to 12 months. It's going to be going public at a much higher valuation than what we're getting in at. And if it does, you could sell some of your shares and lower your risk and then invest in other deals. So the quality of deals that we're getting right now and the people that I've been working with for 30 years, like there's only a few people that I get into these deals with. I get pitched hundreds of deals all the time. I could probably get into 200 deals a year. Everyone's looking to raise money, but it's got to be a specific deal that really works. And now the quality of deals are really getting special where, I'm starting to invest a lot of money in these private areas. And again, I'm really optimistic that some of these are going to work, especially the valuations we're coming in and the terms that we're getting when it comes to 5-year warrants or dividends and stuff like that. It's really cool. And I think a lot of our investors are going to be happy. Hopefully, especially me, since I probably have more money invested in these than everyone else that's investing, but it should be pretty cool. So any questions or comments on that, feel free to email frank@curzioresearch.com. Daniel, what's your email in case anyone wants to talk politics with you?
Daniel@curzioresearch.com.
All right, guys, we'll see you tomorrow. Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. You can put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.